And futures this morning indicating a triple-digit decline at the start of trading after a big week of records last week. The Dow Industrials right now down 328. The S&P is down 27 and the Nasdaq down 67. All three major indices lower on Friday over fears of a spike in inflation. After almost a week-long market melt-up, the Nasdaq snapping a 6-week winning streak. The Dow Industrials were down 537. The Nasdaq was down 410. And the S&P lower by 92. But, of course, that melt-up in stocks have been going on since the end of March. Markets have been on a tear, with the Dow Industrials up 9.5% since then, the S&P up 16%, and the Nasdaq higher by 26% since the end of March. Interest rates this morning are spiking, of course. Kevin Warsh will begin his first full week as chairman of the Federal Reserve, though he has not officially been sworn in yet. We are waiting for that very soon this week. And I spoke with DoubleLine CEO Jeffrey Gundlach yesterday about an outlook on the Fed's next move for the June meeting, and it didn't sound good. Watch this. On Kevin Warsh, the president wants him to cut rates. Can he cut rates right now? Would you ever see Kevin Warsh raising rates?
I think that based upon the term structure of the Treasury market, the odds-on bet is that the next move by the Fed will be a hike. I know that that was not the way we entered the year on the consensus thinking. People were looking for 2 rate cuts this year, but the inflation market has simply not cooperated. And it's just not possible, in my view, to cut interest rates when the 2-year Treasury is almost 50 basis points higher than the Fed funds rate.
Jeffrey,
the next move will be a hike.
Joining me now is Allianz's chief economic advisor. He is Wharton professor and Gramercy Funds Management chairman, Mohamed El-Erian. Mohamed, great to see you. Welcome back. What do you make of Jeffrey Gundlach's comments there that the next move from the Fed is a hike?
Good morning, Maria. I think the most important thing is that the global economy and markets are recalibrating to higher for longer inflation, interest rates, and supply disruptions. Having said that, I think what he misses is we're going to see massive divergence between countries. So if he's talking about Europe, which is not, but if he's talking about Europe, if he's talking about Japan, if he's talking about the Bank of England, I agree. Central banks will hike rates. If he's talking about the Fed, I think the most likely thing is no change, no cut and no hike.
Now, the chairman, the incoming chairman, Kevin Warsh, has been talking a lot over the years about cutting down the Fed's balance sheet. Would that be something that you would expect out of Kevin Warsh sooner rather than later?
So what I would expect out of Kevin and what I would want out of Kevin and what I think we will get out of Kevin is that he looks at the failures of the Fed for the last few years. Part of it has been this use of balance sheet without any underpinning structure and framework, and he's very keen on having that in place. But he's also going to reform the Fed communication, the Fed modeling economic forecasts, the Fed's internal culture. All that needs reforms, and that's where I think his legacy is going to be. If you like, correcting all the slippages that have undermined the credibility of this institution.
Yeah. Mohamed, what do you make of inflation? We had that wholesale spike of 6% last week. Oil prices this morning are higher. A gallon of regular gas at $4.51 today. Yesterday, the president warned Iran on Truth Social, quote, "The clock is ticking and they better get moving fast or they won't be anything left of them. Time is of the essence." The president's also apparently telling Axios that if Tehran does not make a better deal, a quote, "they are going to get hit much harder." The commander-in-chief expected to meet with top security leaders in the Situation Room tomorrow to discuss further potential military options for Iran. And G7 finance ministers are also meeting today in Paris to talk about the economic impact of the prolonged closure of the Strait of Hormuz. Mohamed, where does that leave inflation after last week's numbers?
All that tells you we have inflation that's going to be higher for longer. You spoke about the purchasing price index up at 6%. That's inflation in the pipeline. And the way to think about this, Maria, is that the initial shock from the Middle East war was a very concentrated energy shock. Now we're seeing that dissipate in the economy and leading to higher prices across the board. And I think that is what we're going to see for a while. The good news is that the U.S. won't get the sort of demand destruction. You know, as prices go up, people spend less. That is going to be real for Europe, for Asia. The U.S. is going to outperform in terms of having less demand destruction. But I'm afraid that we are in a higher for longer inflation environment.
Yeah, I mean, I don't disagree with that. I'm with Ryan Payne this morning, Mohamed. Ryan, jump in. Look, the productivity story in the United States is off the charts. So you may have a different macro story in the U.S. than the rest of the world, which is what Mohamed is saying. But let's not forget, we also have a very strong market backdrop here, Ryan, and that has to also be part of this story. I mean, we got a mega year of IPOs ahead of us. SpaceX, OpenAI, Anthropic, potentially going public this year. SpaceX is likely to happen as soon as June 12th. And now we understand BlackRock is considering a $5 to $10 billion investment into SpaceX's IPO. We had Cerebras debuting on Friday. It soared 68% at the close on the first trading day. The stock this morning also on the move. Your thoughts, Ryan? Jump in here on this macro story.
Absolutely. I mean, look, there's make no mistake here. The animal spirits are absolutely out at this point, right? And, going back to Mohamed, what you said, you're right. I mean, we're definitely going to see higher inflation here. The Treasury market's telling you that. But some of that, too, is the fact that we're having, higher than normal economic growth. If you look at what we're tracking for this quarter alone, it's at 4%, that's much higher than we've had for the last couple of years. So I think that, coupled with the fact that we've got all this cash on the sidelines, Cerebras, to me, is just kind of an indication of the fact that this IPO market is just going to keep heating up. We're going to have like 230 IPOs this year, much higher than last year. There's a lot of companies who want to come public. When you have the stock market going straight up like this is the kind of markets that you want to go public in, clearly.
Yes. How does that play into your thinking, Mohamed?
He's absolutely right. There's two things that distinguish the U.S. economy. One is we have a lot of risk capital, willing and able to fund all sorts of things. We're going to see it in the IPOs. We're going to see it in the bond issuance. We're going to see it over and over again. And that's a really strong strategic advantage. And the second thing we have, as you said, Maria, we have better productivity growth. So that should help us outperform the rest of the world, and we will continue to do so.
All right, we will leave it there. Mohamed, always a pleasure. Thank you, sir. Mohamed El-Erian.
Thank you.
And don't miss my interview this morning at 8:20 a.m. Eastern with one of Cerebras' earliest investors. Lior Susan is the chairman of the company, and he will join us to give us the growth story and the runway there at Cerebras when we come back. Stay with us. We'll be right back.